International Business Brokers Association and M&A Source just released their Q1 2026 Market Pulse survey. And here are the results. I reviewed the findings specifically for businesses valued between $5 million and $50 million. And there are several important signals that business owners should be paying attention to right now. The lower middle market remains active, valuations are stable, buyer demand remains strong, and many deals are still closing very close to expected value. But there are some surprising shifts in buyer behavior that could impact how you position your business for sale. Let's break down the key findings. The first major takeaway is valuation. Businesses in the $5 to $50 million range are still trading at approximately 4.5 times EBITDA. That multiple has remained relatively steady. The key message is this: the market has not become dramatically more aggressive. Strong companies are still commanding value, but buyers remain disciplined. This means sellers should not assume that a good market alone creates premium pricing. And always remember, high quality still determines the final outcome. One of the most interesting data points is offer volume. 83% of businesses over $5 million attracted at least 3 offers. Some received more than 10. That's important because buyer competition drives leverage, and leverage improves both pricing and terms. The takeaway is simple. There are buyers, but they are highly selective. Another strong indicator is transaction structure. Average cash at close for this market reached roughly 87%. That is significant. Seller financing fell to just 5%. That means buyers are coming with stronger capital structures and less dependence on seller notes. For owners, this creates better liquidity outcomes. This may be the biggest eye-opener in the report. 68% of buyers in this segment came from over 100 miles away. That means the buyer pool is national. In many cases, it's no longer about local competitors. The right buyer may be across the country. That changes how businesses should be marketed. The report also revealed a major issue. Many owners entering the market have done no formal exit planning, even in larger transactions. That creates unnecessary risk. Deals become harder when financials, management, and documentation are not prepared in advance. Preparation remains one of the largest hidden value drivers. Artificial intelligence is being discussed in deals, but it is not yet changing valuation materially. 67% of advisors reported no meaningful valuation impact. That tells us fundamentals still dominate: revenue quality, management depth, transferability. Ultimately, these core fundamentals still determine the final pricing. So what does this mean for owners in the 5 to 50 million range? The market remains active, buyers are competing. Cash at close is strong, valuation remains stable, national buyer reach continues expanding. But preparation matters more than ever. The strongest outcomes are not simply because of market conditions. They happen because the business is positioned correctly before going to market. If you are considering a sale, the market is there, the buyers are there, the capital is there. The real question is whether your company is positioned to maximize it.